Big Lots. For decades, the name conjured images of treasure hunts, weekend bargains, and the thrill of snagging that one-of-a-kind closeout deal. Yet by 2024, headlines announced a company in crisis, bogged down by debt, facing stiff competition, and ultimately filing for bankruptcy. Today, store-closing banners outnumber the once-familiar orange signs. How did Big Lots, a discount icon, unravel so quickly? This is the decline of Big Lots, exclusively on the Venture Vault. Part 1. Humble Origins and a Rising Star. The seeds of Big Lots were planted in 1967 when entrepreneur Sol Schenck opened a modest store in Columbus, Ohio. His specialty was closeout merchandise, items that other retailers wanted to offload at rock-bottom prices. Overproduction, discounted models, or entire businesses going under, Schenck was ready to buy it all. The concept was simple yet ingenious. Sell surplus goods cheap and pass the savings on to customers. By the early 1980s, Schenck's operation ballooned through acquisitions of smaller discount stores like Odd Lots and Mac Frugals. Each store had its own name, but all followed the same premise: ultra-low prices on random products. You might find designer jeans one week and mismatched dinnerware the next. That sense of unpredictability became Big Lots' charm. Weekend shoppers loved the treasure hunt feel, never knowing what they might discover. In 1982, Schenck famously bought 2,500 unsold DeLorean cars from a bankruptcy court, flipping them at discounted prices and pocketing a profit. Deals like that turned Big Lots into a cult favorite among bargain seekers and gave the chain a renegade reputation. By the late 1980s, the companies then called Consolidated Stores operated hundreds of stores under various names, laying the groundwork for what would become Big Lots as we know it. Part number 2, the consolidation and surge. Throughout the 1990s, Big Lots continued to devour regional closeout competitors, consolidating them under a single corporate umbrella. By 2001, all these different brands, Odd Lots, Mac Frugals, Pick and Save, were unified under the Big Lots banner. The chain embarked on a nationwide advertising blitz, pitching itself as the go-to spot for unpredictable bargains. Rows of stark orange signs in big black letters soon dotted shopping centers across America. Big Lots refined its treasure hunt model, stuffing aisles with everything from off-brand cereals to name-brand furniture, all sold at a discount. For a while, the formula worked. Shoppers seeking cheap home goods and everyday items flocked to Big Lots' cavernous stores. The brand grew to about 1,400 locations, becoming a household name for budget-conscious families. Yet cracks quietly formed as the discount landscape evolved. Competitors like Walmart started offering their own robust clearance sections, while TJX, owners of TJ Maxx and HomeGoods, attracted similar shoppers with a more curated discount experience. Still, Big Lots endured. Through the early 2000s, it boasted solid, if not stellar, performance. Then came the decade that changed everything. Part number 3, straying from the closeout roots. By the 2010s, online shopping had exploded. Amazon redefined convenience, and discount giants like Walmart and Target learned how to slash prices effectively while offering speed and variety. Feeling pressure, Big Lots made a fateful choice. It would pivot away from its chaotic closeout atmosphere, opting instead for a more conventional, clean and bright store environment. Store layouts were reorganized to showcase furniture, couches, recliners, and dining sets front and center. Management saw a chance to become a budget-friendly home goods destination. As part of this move, Big Lots acquired rights to organize recognizable furniture brands, most notably Broy Hill, seeking to blend discount pricing with a touch of brand name credibility. This pivot, however, created an identity crisis. Was Big Lots still the place for random closeout gems, or was it now a discount version of a furniture showroom? Veteran bargain hunters found fewer of the quirky limited-time deals they loved, while furniture buyers sometimes balked at the chain's still discount aesthetic. Straddling these two worlds was a delicate balance, and Big Lots risked losing both sets of shoppers. The pivot also required bigger store footprints and pricier inventory, tying up capital that might otherwise have gone into e-commerce or marketing. Meanwhile, the rise of Wayfair and online furniture made the in-store approach feel dated. Rival discounters like Ollie's Bargain Outlet doubled down on the old-school closeout vibe, drawing those who wanted a true treasure hunt. In chasing a broader market, Big Lots began slipping from the niche that had once fueled its success. Part 4. The Pandemic Whiplash. Then came 2020. As COVID-19 spread and lockdowns took hold, retail turned upside down. Oddly enough, Big Lots initially thrived. Deemed an essential business, due to selling food and household staples, it stayed open while other stores temporarily shut their doors. Shoppers rushing to stock pantries and refurnish their stay-at-home spaces flocked to Big Lots. Sales soared 27% in some quarters, hitting record highs. Buoyed by stimulus checks and the wave of pandemic-related nesting, Big Lots overcommitted. Eager to keep shelves stocked, it purchased massive amounts of inventory, particularly in furniture and seasonal goods, hoping the pandemic-driven shopping frenzy would become the new normal. The company also expanded store counts or remodeled locations, banking on continued growth. But by late 2021, as lockdowns eased and stimulus money dried up, demand shriveled. People shifted spending back to travel, dining out, and experiences. The furniture category, which had briefly propelled Big Lots to success, tanked. Suddenly, the chain was left with overstuffed warehouses and a consumer base no longer in a buying mood. Inflation in 2022 made matters worse. Big Lots' core demographic, budget-conscious families, felt the pinch, cutting non-essentials from their budgets. The glut of unsold inventory led to steep markdowns, slashing profit margins. After the pandemic sugar high, the crash came swiftly. By 2023, Big Lots was posting some of its steepest year-over-year sales declines in company history. Part 5. Financial Woes. Even as sales softened, Big Lots made a series of questionable financial decisions. Stock buybacks. During the pandemic surge, Big Lots spent hundreds of millions buying back its own stock, believing the share price was undervalued. As demand plummeted, shares lost nearly 90% of their value, and the company's cash reserves evaporated right when it needed them most. Aggressive expansion. In 2022, Big Lots opened or renovated dozens of stores, anticipating higher sales than never materialized. This left the chain heavily leveraged and paying hefty lease obligations. Mounting debt. To fund expansion and inventory costs, Big Lots leaned on credit lines. As losses mounted, lenders grew cautious. By early 2024, the company was juggling over $550 million in liabilities it couldn't repay on schedule. Meanwhile, competition only intensified. Walmart hammered Big Lots on everyday low prices, Dollar General and Family Dollar snatched up customers for small, quick shopping trips, and e-commerce options undercut Big Lots' furniture push. The brand found itself spread too thin, still partially a closeout store, partially a furniture store, partially a discount grocer, and master of none. Part 6. The Bankruptcy. By mid-2024, the writing was on the wall. Quarterly losses soared, inventory gluts persisted, and the chain's credit rating sank. In September 2024, Big Lots filed Chapter 11 bankruptcy to stave off immediate collapse. The plan? Sell the business to a private equity firm called Nexus Capital Management and continue operations under a new owner who'd inject fresh capital. For a fleeting moment, it looked like Big Lots would survive intact. But in December 2024, Nexus Capital abruptly pulled out of the deal. Industry observers cited Big Lots' rapidly deteriorating finances and tangled store leases. With no immediate buyer, Big Lots announced it would liquidate all stores, sending shockwaves through its 27,000 employees and countless loyal customers who'd been shopping there for decades. Then, in a final twist, another buyer emerged at the last minute. A combination of variety wholesalers and a major retail liquidator, Gordon Brothers, reached a deal to save between 200 and 400 stores, giving Big Lots a partial lifeline. The rest faced swift closure, with store closing sales offering 70 to 90% off everything from end tables to dog food. Long lines of bargain hunters snaked through parking lots, but for employees, it felt surreal and heartbreaking. Many had dedicated their careers to Big Lots, only to see entire stores dismantled. A brand once known for last-minute discount treasures now faced a final clearance sale of its own. Lessons from Big Lots' downfall. Number 1. Identity lost. Thriving on treasure hunt closeouts, Big Lots diluted its unique appeal by focusing too heavily on conventional inventory and furniture. Number 2. Mismanaged debt. Aggressive expansion and stock buybacks drained cash reserves, leaving the company vulnerable when sales dropped. Number 3. Digital shortfalls. A late week e-commerce strategy allowed Amazon, Wayfair, and even Walmart to capture crucial online market. Number 4, pandemic mirage. The 2020 sales surge led Big Lots to overstock and overexpand, only to face a devastating crash when normalcy returned. Number 5, misreading the customer. Budget-minded shoppers felt alienated by pricier furniture lines, while wealthier consumers preferred more upscale stores. Big Lots was once the champion of closeout bargains, a quirky destination for shoppers chasing an incredible deal. But through misaligned pivots, crushing debt, and missed digital opportunities, the brand slipped from treasure trove to cautionary tale. Now, as liquidation signs hang where bold orange logos once stood, we're left to wonder, in a retail world dominated by e-commerce speed and relentless competition, is there still a place for the old-school discount hunt? Or is Big Lots a downfall proof that any retailer ignoring its roots risks losing everything? Thanks for watching The Venture Vault, where we unpacked the untold stories of corporate success and collapse, one brand at a time. Don't forget to like, subscribe, and hit the notification bell for more deep dives into the shifting business landscape. Until next time, keep exploring the vault. And remember, every empire is just one misstep away from unraveling.